Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, August 27th, 2018. In this video, I want to go over trade ideas. And what we'll do is we'll keep it simple. There's a lot of trade ideas out there at any given time. Sometimes more than others, but let's just focus on those that I've highlighted over the last week. So I did 3 videos last week covering swing trade ideas, some official, some not official. And just a side note to that, if I didn't think a trade idea was worth sharing, I wouldn't share it on the front page. Official trade ideas just take more time and effort. I have to mark up exact price targets, suggested stops, beta adjusted position size, do follow-up posts. So I wanted to just say that these are all, if I and some of the trade ideas, by the way, it can be trade setups or actionable uh, trade ideas at the time. In other words, a setup is something you watch and it will trigger a long or short entry, or it won't above a certain predefined level, such as a breakout above a trend line or a breakdown below support or some type of chart pattern. So that's what I refer to as trade ideas, both trade setups and actionable or active trade ideas at the time. So let's just dive into the charts. The only one that may not have been in that video, I posted this. I know I posted it in the trading room on the swing trading group last week. Is XRT. Actually, another member had mentioned XRT looking bearish, and I concurred. This is, markets are ripping today. Not ripping. We have a steady bid under the markets. It's a broad-based rally, but yet there's very few sectors down, and this is one of them. XRT, the retail stocks, and this is under consideration for an official short trade. What do I see in XRT? Well, I see strong divergences. We were diverging at this point. We had a little bit of a pullback there. Let me just add that trend line in right there. We did have a correction, traded sideways for a while, pushed up, made a marginal new high. And this is exactly what I foresee happening with the S&P 500. By the way, you had this, test right here, another test, finally broke out to new highs, but we did so with negative divergence, just like the broad markets have now. And I expect this breakout to fail. As of now, it hasn't failed. This was a pretty well-defined level. You can see right there, it broke out. However, when I zoom in, I look at the chart. And by the way, guys, and I mentioned this in the trading room, I went through either the bulk of, if not all, of the components of XRT. Again, this is the retail sector ETF, and many of those charts confirmed, short entries or likely tops in a lot of those stocks. Corrections coming. So there it is. This is a gravestone doji right here. This doji candlestick. So you have a gravestone doji followed by a reversal so far. We're seeing again down today in a green tape in the broad market, and so it's still on watch. And if you're looking for trade ideas, there's one you can always short it. When I see potential topping candlesticks, I think it's objective like that. If you do agree with the analysis, what you do is you short it. You can short it, right the day after. Ideally, the day after. You want to see markets close on or below. So there's a red candle, another red candle right here, and I should say the day or two in the following days. And you can short it there with a stop above the top of that bearish candle, because if we move back above it, we put in a green candle that takes that out and closes, then it really negates the bearish nature of that gravestone doji. So there it is. More downside, I believe, but your next buy, or no, I'm sorry, I'm going in reverse, talking too fast. Your next sell signal will come on a break below the 51-ish support level again, which is that trading range there that we had for a couple months. Looks like we traded sideways. And then, of course, finally, and this would be a what I like to call a nail in the coffin trade or sell signal, is a solid break below the uptrend line, which also forms a bearish rising wedge. You have this trend line here. Let's grab the line tool. There it is, trend line here. Trend line there. There's a bearish rising wedge, and your negative divergence right there. Now, keep in mind, there is support just below, because we'll come in, that bottom of that trading range will come into play. So you might get something like this, a little kickback rally. And if we do back test the wedge from below, that would offer another objective short entry for then a swing down to either of these two target levels, these lines I have marked here. All right, let's move a little faster, because I'd really like to cover all the trade ideas that I've highlighted in recent weeks. Go here, Tesla. You guys know I've been persistently bearish on Tesla. Um, and it's continues to play out. These were all support levels all along the way, and you can see we gapped down below this one. We didn't get a reaction there. That's when the selling was really getting going. There was an impulsive break. Then we hit this one, 286.40. It's a pretty key level right here. We hit that level in reverse, but we bounced and we rallied right back to resistance, and we're starting to roll over. You can see I had these lines right here. These two white lines mark a gap. There's that gap right there. Actually, technically, the top of the gap is a little above there, but I had these previous reactions from right here. See, there's the top of your gap where the finger's pointing, and there's where I had that line. So either way, that's a resistance zone. You want to be safe, move it up to technically to the top of the gap, which is that closing candle on the day before we close the gap down. So there's pretty significant resistance, trend indicators, and really the daily chart and everything else that I think is going on with the company indicate more downside to come. But at this point, again, we had a good move down. It is objective to shorter add-on, I will say that, but not one of my favorites. It was really a nice short up here after that whole tweeting incident and before really the markets realized that Musk was full of you know what. So we'll see what happens with Tesla. But I think again, there's more downside in the coming months, and I think we come down at least to this 271.73 level, and if not, that 244.35 level, and possibly more. I look at this long-term chart, and this is a weekly chart. We have a trend line right here. This is how I draw that trend line. And if that trend line in this 277-ish support breaks and gives way, that would be pretty bearish for Tesla longer term. Right now, I'm just looking at the near term on that one. All right, let's get going along here a little faster. WEC, I posted this one last week, just breaking down. I had a price alert right here, and that red candle that was on Wednesday. We had back tested it the following day and the next, and now we're rolling over impulsively. You can see a big red candle engulfing these previous two green candles. That's a bearish engulfing candle. So that one looks to have completed its business, and it appears to me. We had a divergent high at the top, bearish rising wedge breakdown, and I think this one's coming down here to about give or take the $65 level at minimum. And that would be a pretty decent, nothing huge, but a decent short, especially if you were able to short on the back test, have another about 3% downside on that at minimum again. Could certainly see the potential for a bigger move down here all the way to about 59.35. Next up, JT. JT's playing out great. This one had a lot of potential. He's a lower price stock, but nice, well-defined downtrend line. I believe it was posted back here a couple weeks ago, first in the trading room or in one of the videos or both. And that one's already rallied right up to the button, to that second target already now, and that's about a 17% gain so far. And you can see, look where it stopped. I mean, I had that level at 530. The high on the stock was 530. That level was identified in advance, and you can see the reaction off it. Pretty big, pullback in relative, in percentage terms. It doesn't look like much. You have to really, it's not going to let me do it here. There it is, about a 5% pullback off that level. So that's why it lists these multiple price targets. Each one is a level where a reaction is likely, and a reaction is defined as two things, either consolidation or a pullback. And in this case, you had a consolidation right on that first target level when it was hit. We quickly popped up once we moved out of that consolidation range, hit the second target, pulled back about 5%. That's our reaction, pullback there. And your next buy signal will be when it can punch up through 530. I certainly wouldn't chase it now if you didn't take it, but if you are long, I think it's prudent to raise stops, something below that recent trading range there, down around maybe 480 or so, to protect profits and hold out for maybe a move up here to 574. If not, it wouldn't have been couldn't hurt to take some or all your profits at 530 when that was hit. So JT is looking okay, but again, I wouldn't take it here, but I would if you're prone to letting your winners run, which is a good strategy in trading and investing. There may be more. These divergences that I just pointed out here may be burned through. So I have potential divergences I just drew there on the indicators, and they could certainly extend a little bit like this, get up there and hit that target. If that 574 is hit, I can tell you that would be a good time to book full profits, in my opinion. It is significant resistance. So there's JT. Doing well so far. I mentioned GE last week. This was recently a long trade, was successful or not, depends how you trade these. So I list. Oh, sorry. hit the pause button by mistake. That's why I list multiple price targets. Every trade, some traders like to get quick profits, hit and run. Other are more trend or swing traders. That's a long-term target, which I still believe has potential. So after hitting the second target, we fell back below the official stop, and this is the setup I'm posting now. I'm watching. G's looking good. It has this bullish falling wedge pattern. We put in that recent new low was another divergent low, and what I really like about this one, these are some of my favorite trades. You had a well-watched support level here, 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 and finally the stock broke down. And if it can snap back and recover, just like what I outlined in the euro recently, the euro US dollar pair with that false breakdown, those are pretty bullish when you get them because the shorts pile in. They say, oh, okay, GE just lost that 1272 support. So if we can get back above there convincingly, I'm not talking a print of 1273 on low volume. I'm talking a nice pop, impulsive buying, especially a daily close, and a break above that downtrend line. I really love trades when you have intersecting resistance levels. To be taken out. That would be a nice buy signal. So look for a break at the downtrend line, i.e. the falling wedge, and above that 12, we'll call it 1275 if you want to be safe. And then these are all potential price targets up here. So there's GE. Let's go on to the next one here. GDX and gold, I mentioned those. There's not much else to add to those. There's GDX. I need to populate the lines on this chart. There we go. All right, and if this one, there's going to be or there will be, or is a potential downtrend line that may come into play here. There's also a gap to contend with right here. You zoom in, you can see that big gap. But overall, everything that I've been looking for is playing out in gold and the euro and U.S. dollar so far. So I have no reason to believe that at this point the GDX is not going to continue to come on up in the coming weeks to months and come in at least back test at 2112 ish. That was a key support level, 2112 ish. And that would be another 9% or so in GDX. And then gold, same story, looking good so far, chugging on up. Took back that 114-ish level. That was bullish to see that was a former key support level. Resistance once broken, we've taken it out. We also popped above this downtrend channel, this descending price channel. That was bullish. All in all, looking good so far. Here's a weekly chart, big green candle right there, taking out that red. That's potential bottoming action right there. So there's gold looking good from a weekly time frame as well. And then, of course, this trade will hinge largely on, if not exclusively on, where the euro US dollar goes, or really where the US dollar goes, and that's going to be determined by where the euro goes. So if you follow my analysis, this is just playing out perfectly so far, and just a little more work to be done. Stage 1 on the bear trap scenario was a break below there. Stage 2 was a recovery of that, a reversal, of course, then a recovery of that level, which we've had. Now we're at that downtrend line, which is resistance. So I'll say this. The near term, if you're long gold, I think sit tight. It's hard. Sometimes these if a bottom is in, it can happen quick. But I wouldn't be adding aggressively right now at this point because the euro US dollar pair is at resistance. So that's the initial tag, or at least for the first time since back here. So maybe a little pullback first. I think that would be healthy to help work off the very near-term overbought conditions. We're not overbought on the daily time frame. When I say near-term, I'm talking the short-term time frames, intraday charts, and all that. But if we get an impulsive break above there, especially if we clear these recent highs, and I think that's pretty safe to say that there's a major top in the dollar, bottom in the euro, and gold should continue to do well throughout the rest of the year and possibly and quite likely into 2019. All right, next up. BILI, that was like a sister trade, if you will, to the JT that I covered earlier, and that was based off the 60-minute chart. And there it is. We finally, it was posted here under the downtrend line, had one more reaction since it was posted, then went on to break out right there and rallied about 17%. Like I said, this chart is very similar to that JT chart. And it had a little correction after that initial thrust, and it's moving back up. Looks fine for now if it takes out that previous high, which I think it will. Again, this is my preferred swing zone right here, 1273 to 1312. I think if it gets there, it'd be a good time to either tighten stops up or maybe just take some profits because it might look like this. I'll draw it out here and we'll see some divergence on the 60-minute chart and then maybe a reversal there. So look to, if you haven't done so already, maybe tighten stops or take profits up there. And next up would be, down to my notepad here. Let's talk about natural gas. That was just posted a couple times, couple charts on Friday. Oops, nope, we need to go to futures. Let's look at the futures here. Let's look at nat gas, that's sugar. I'll get to that in a second. Sugar looking pretty sweet today. Here's nat gas. I pointed out this breakdown last week. I think it's just on Friday, was it? Friday or Thursday? Anyways, we came down. You can see charts are playing out pretty well. We hit that first support level. It's a pretty well-defined support level. Reaction here, reaction, 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 another reaction. Consolidated there, very muted bounce, and then boom, broke down, gave up the ghost, and now we're at my second target already. And this is I mentioned in the trading room today, my preferred swing target right here is this zone. I'm going to cover my position right around the top of that zone there, which comes in at 2.827. That's where I think we'll get a reaction. I can see quite a bit. I think that's pretty significant support. Not to say that nat gas can't go lower. You can always trail stop down if you're short and you think there's more to it. But I'm looking at these reactions. That was support, which once broken became resistance right there. Resistance again, resistance once more. Finally, we broke out, back tested, and resistance once broken becomes support. So this is a well-defined support level, and hence that is where I will be looking to cover my short position. And then for you that don't trade futures, we have an alternative. You have DGAS. DGAS is the 3 times levered short. It tracks nat gas futures. Or you can do UGAS as well. These things can have some nasty decay over time. So if you can short UGAS, you actually put that decay in your favor. UGAS is the leveraged long one. So that would just be this chart in reverse. So since I last updated this one, we went ahead and we broke out. You can see right here, we had a gap. That gap was backfilled. It was also resistance. We stopped there again. Then we gapped up today above intersecting downtrend line resistance as well as a horizontal price resistance there around 2183. So that looks good. And you can see there's another gap to contend with there. I don't put too high a weighting in these gaps. They do often tend to play well. But remember, nat gas it's a futures contract that trades virtually around the clock. So you're not going to see the gaps on the chart of nat gas like you will, or NG, which I just showed you the futures as you will in these ETNs. So these are, I'm not going to call them an aberration. Again, there are a lot of traders that trade these, and sometimes it's a case of the tail wagging the dog, meaning you have so many funds and things like GLD is a great example. Some of the world's largest hedge funds, instead of buying, that's their proxy. They'll buy GLD, the ETF, instead of going with gold futures or some other means. It's very liquid, easy in and out, low expense ratios, and that happens a lot with these ETNs. So therefore, these ETNs have to buy and sell the futures contracts. So if you have a lot of investors buying or selling these, that can affect and does affect the price of the underlying commodities in the futures contracts there. So that's why I do look at both charts. Next up is CL. These are crude futures. I pointed out this bearish rising wedge pattern and breakdown last week. So far, nothing to see here really. It's just traded sideways since then. You can see that. So, the breakdown hasn't failed. There was divergence. I do expect it to play out. Whether or not we push a little higher, this divergence will certainly, it's not at any risk of being taken out anytime soon. That doesn't mean it can't be down the road, but any push higher will just continue to extend these existing divergences. So whether we push up another higher, maybe even go on to back test that wedge at higher levels, that trend line right there, I'll draw like that. Anything is possible. I'm not expecting that. I favor more downside here. But right now, at this point, to really get the party started, if you're not already short and you're considering it, I think you need to see a break of these recent lows right there. Since the breakdown of the wedge, those 2 reaction lows right there and there. That would probably, of course, we have support. I should make clear just below that at 68.14. So this is your safe bet. Wait for that 68.14 level to go, and that would open a door up to a move for a move down to 67.15 and quite likely 66. I'll probably pull this trend line up. Yes, I want to revise that target. 66.43. I can tell you that I am short crude CL, and if it gets there a little bit above that level, I will be covering if I'm not stopped out sooner. And it's possible I take profits before then. I can actually raise this line as well. But for now, I'm just waiting to see how this develops and sitting tight with my position. And here's USO, one of the many proxies for trading crude oil if you don't use futures. We have a somewhat, it's not very well defined, but somewhat of a trend line trying to form there. Maybe it'll morph into something like this. I can grab a lot of those candles, give you a trend line there. Quite a bit of resistance overhead too. So locked in a sort of a near term just sideways range since it broke down on the futures chart. We have reactions here, reactions there, a lot of reactions. So I can tell you that right now that this would be my uppermost bounce target. I'd be concerned if we go much above 1470. You can see a lot of reactions as you go to the left of the chart here that defines that as a pretty well watched level on USO. So 14, call it around 1470 or so. Anything above there, I'll probably just throw the trade away, cut my losses if it gets there. FXI, I've been pounding the drums on the Asian and European markets. Why I didn't make all of these official trades, I don't know, because I did the video. There were so many countries out there, but I focused mainly on the European and the Asian countries, including China, and they just continue to move up. FXI is now clearly broken out. This was a downtrend line, falling wedge, big strong divergences, tremendous underperformance compared to the U.S. markets. This is the mean reversion going on, even though the U.S. markets are up today. China's up a lot more. At least FXI is 2.14. So this is, what we call relative strength. It is moving up more than the U.S. markets are today, and I expect that mean reversion to continue. And that can come in the form of either continued outperformance from both the Asian and the European markets, which I expect, or continued upside, I should say, or the U.S. markets could actually fall. But I do, again, this is where I think the risk reward is so much better right now than the U.S. markets, despite the resilient trend, near-term trend. There's FXI, it's one I covered and focused on. CWI was a one-shot fits all if you want to have exposure to mostly European and Asian countries. And that one continues to move up as well. It's up 1.32%, also outperforming the U.S. markets. You have a lot of China's a smaller weighting in this one, but you have we're at resistance now. So last week was a good time to buy. At this point, you have dual intersecting resistance levels. Now I expect them to be taken out, but whether we have a pullback first or not, that's the wild card. And I can just tell you this: Trading 101, it is not objective to go long at resistance. This is a very well-defined resistance level. I see a lot of reactions all the way back from this point here. There were reactions from below. We finally broke out and had successfully back tested that level every point. This was just an intraday spike. That's a candlestick shadow, not a body. That means we punched through their intraday, closed back above. That means that support successfully was defended, and then it was broken here. So the support, once broken, becomes resistance. We've had a couple tries at it. I think we'll take it out, whether we need to come back in one more time or not, because remember, we're at intersecting resistance levels, downtrend line resistance and price resistance. And if and when that breaks, which is my expectation, this is again my swing target right now, 39.78. Then at that point, we'll just have to look at the charts and see if it looks like there's going to be a little more upside. Another option was I mentioned is EFA. You don't have China in this one. You do have some other Asian countries, but I believe this is ex-China. EFA is another similar ETF if you want that exposure to a lot of European and Asian countries. I already covered the US dollar. Yes, I did. XLY. I'll hit on it just because I covered it recently. It's a trade idea. It's underwater, but I still think it will pan out if we're not stopped out. I will have to revisit where the stop is on this one. And it's all about, again, on this one, about this company right here, Amazon. 1/4 of XLY is Amazon. Amazon is just compressing right here. It is moving higher, but it's losing momentum. That's clearly evidenced in the negative divergence down on the momentum indicators. And you just have to be patient. If we're stopped out of that trade, I can tell you this: if and when Amazon gives me a sell signal here, I'll certainly short it again. I should have, in hindsight, of course, maybe waited to give it the benefit of the doubt, waited for Amazon to break down. I thought it was going to happen recently, just because the stock is pinching towards the apex of this wedge. But again, so the XLY and Amazon really are tied at the hip there because of the overweighting that Amazon has. REITs, that's another sector. Not all ships are lifted in a rising tide. The tide is rising today with the broad markets up. REITs are down again. This is IYR, the REIT ETF, down 0.5%, and our proxy on the official trade is SRS up 0.78%. There's our bullish falling wedge pattern, positive divergence right there, just like we had divergence right here before this sharp rally in SRS. Looks good and will look even better once this downtrend line is taken out. Those are the targets on SRS. SHOP, well, this one's hanging in there. This is one that's shorted. We shorted it, broke down, and it's been kicking back against this resistance line recently. Looking at the posture on the PPO and the MACD, I can certainly see a back test. So at this point in time, I'd almost favor a back test just looking at the way the charts look. So if you're not already short this one, probably best to hold off, maybe get on a back test or see if we roll over here. That's always a possibility. So if you're still in it, stick with the original trade. The original, stop parameter is what I do. When I go into a trade, I have a trading plan. Unless something changes in the charts, something compelling, it's best I find to just stick with your trading plan and have that discipline on each trade. Some will play out, some won't. All right, shop, and then PPC, Pilgrim's Pride, was a sister trade to SAFM, which already hit the first price target. Nothing spectacular. It has broken out back tested and is moving up. And again, I still like the look of this one longer term. These are the targets, and that is again a sister trade. This is the official trade SAFM, which hit the first target last week, and still looks good from a swing perspective up here to that final target as of now. And if I think I need to change that, there were a couple trades recently in the past few months that I called in early. Netflix was one. We nailed the entry on that one on the day right there on that kickback or that big day. We shorted it right here when it bounced back to the backfill that gap or come to the bottom of that gap. And then where was it? Right here. I revised the final target. I had these other targets, but I saw enough in the charts, particularly in the 60-minute chart, and that's what I highlighted. We had a bullish falling wedge. We had positive divergence. Those divergences extended a little bit after we closed the trade out, but stayed intact. And this is what I often talk about, how divergences, as long as they're intact, they build, and then boom, the reversal did set in, and from there, the stock rallied about 20%. So we sidestepped that give back by closing that trade out early, and that's what I talk about, where I am, flexible in my trading plan. If I see a compelling reason to get out of a trade, I'll do so. I believe I covered KHC last week, so I'll just do an update. This is an active trade. It's a growth and income trade. Remember, this one's kicking out a nice dividend, about 4.25%. So it's not anything to write home about. We've been trading sideways since we entered this one. We hit the first target way back here, I believe. That's when it was for a nice profit. And since then, it's just trading sideways. And we're getting paid again. It kicks out that dividend every quarter. So you're getting paid to wait. But the story is this one needs to take out this sideways trading range. And while still favor an upside break, you just have to respect whichever way it breaks, because that will most likely determine the next major trend on that one. So that's KHC. Not one that I'd add to if I didn't already own it. I just wanted to update it for you, for those of you that are in it. ITA, Dow Jones, U.S. Aerospace. We have a stop on a close above 208.50. At this point in time, I almost wish this one would just get it over with. It's not doing it yet. It's trading. Closed at 208. No. High so far today, 208.49. Is that what I'm looking at here? No, 208.90. It's at 208.49 right now. So they may get us on this one today. If they do, I do think this one will head lower. I can see these divergences extending. This looks like the broad market to me. If it takes out puts in a new high, you can see these divergence lines will be extended, and it will almost certainly, or I shouldn't say almost certainly, but quite likely fail. So it's up to you. If you want to extend your stops on that one, I think the upside's minimal, but they're probably going to, if they pop that high over this recent high, they're probably going to run it. There'll probably be some stops cleared before a reversal, and then your next sell signal will come on a break of this minor uptrend line right here. So what that looks like, we can extend, or maybe we fail here at that previous high. That would be nice, and especially again to see this minor uptrend line break and then come on down here to this first target. And that's the sole target actually on this trade. We're just looking to right now. This is just a potential long-term target zone, but I haven't made that official. If you see the word potential, that's not an official target. It's just something that if the market's rolled over, the sector rolled over, if I saw enough in the charts, I would extend or consider extending this trade possibly down as far as those levels. It's ITA, IEF, and TLT. I'm still, the bonds are doing well. They're paying us. Same story as KHC, I think that I just covered. You're kicking off nice income. We're not getting rich quick on this one, but again, it's steady Eddie, and most importantly, it's part of asset allocation. That is the key to investing, trading, and right now we have a combination of commodities, precious metals. Bonds and stocks in both longs and shorts on the site, and that helps to give you an all-weather portfolio. If one cylinder isn't firing, hopefully the others are kicking in at the time. And there's TLT. TLT is looking just like IEF. TLT needs to pop above that 122.50ish level, and if it does, I think there'll be some more capital appreciation in this one. We've been able to swing trade it off the top of this range, off the bottom to the top, and at this point, I'm favoring a break above there, and that would look pretty nice. All right, next up, and finally, let's wrap it up with sugar. All right, let's go to SB, sugar. There we go. All right, I've been updating this one quite a bit in the trading room. It's an official trade on the site via CANE, the ETF CANE, and what I've been watching for, and we finally got the buy signal today, which I posted earlier in the trading room. We were here, and I said we need to take out this 1055-ish level or whatever that's 1054. You can see intersecting. We have price support. You can see these reactions here, or price resistance it was, and downtrend line resistance. Now we've punched above it, so that's bullish, and that should open the door for a move up here to this next resistance zone, which then should have, if that does play out, as I suspect, should have some bullish implications on CANE. Now, CANE's the ETN, doesn't do a perfect job. They've been testing our patience with the stop, but they haven't stopped us out yet, and it's starting to move up. And again, if my 60-minute chart on sugar futures plays out the way I think it will, that should take us above this downtrend line. And I also want to add here as well, guys, this is not the best defined downtrend line. I have really just a couple reactions that really fit it well. So I'm more concerned about the bottoming action, and as well I'm concerned about what the charts of the futures look like. So right now, certainly work to be done to firm up the case for a major bottom in sugar, but sugar and some other ETFs are looking well, commodity ETNs I should say. Now I'm going to have to cut this video short. I've gone over the 30-minute mark and I try to avoid doing that. So I'll do an update on any other commodities or any other trade ideas that stand out. I'll try to put that together in a second video or do some updates in the trading room. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.